Hello guys, good morning. We're gonna start at 7:10. Hello guys, good morning everyone.
Good morning.
Hi, teacher.
Good morning,
Good
good
morning.
morning. So please help me remember where did we left last class? It was just before, I mean after case one, right? I remember we saw this one right now. We finished case one, which was what happens when you do a variable costing, which is absorbing costing, when you have the same production as sales, right? We are selling 15,000 and we are producing 15,000. And we did the absorbing costing method and we did the variable costing method and we determined that the net profit, I'm sorry, the operating income in both of the cases was the same. Remember that?
Yes, teacher.
Perfect. So if you remember, just a quick recap, what we were doing here is that we were building a financial statement. Actually, it's the income statement where we are building the profit and loss statement. What we were doing is that we were separating two types of reporting. One was the variable type of reporting, which is this one here, and the other one was the absorbing reporting, which is the one at the top. And what we saw was that when you are doing the absorbing costing, you do not separate the cost of goods sold, remember? You have fixed plus variable cost here. And also in the sales administrative, you have fixed plus variable expenses. Remember that? Difference with variable method is that directly with the production cost, you only have variable cost and expense, right? And at the bottom, you have only fixed cost and expense, right?
Yes, teacher.
And you have a combination here. You could mix sales and administrative, which means CG&A means sales and administrative, and cost of goods sold, COGS means cost of goods sold. You could mix those in the variable costing. You wouldn't do that in the absorbing costing. And we were checking that for internal analysis purposes, variable costing, variable reporting, it's actually used a lot because, well, this separation allows you to see something that is called contribution margin. That is how much money exactly with the variable cost and expenses you are generating. And in the absorbing costing, you don't have that. You have fixed and variable inside each of its categories. So that's basically what we saw last class, and you finished this activity. So let's move to the next one, unless you have a question. And again, if you have a question, please stop me, just interrupt me so I can answer your question. I don't want to move fast, but if you don't tell me if you don't interrupt me to ask questions, then I cannot know if I'm moving too fast or if I'm not. Okay. So if you have any questions, just please let me know, and I will stop and explain myself again. So we ended up checking the
Sorry,
result.
I do have a question.
What question do you have?
Yes, like I understand the difference, but I understand when you use each of those, or where it's like better to use the absorbing method or the viral method.
Okay, thank you. That's actually a really nice, really good question. And we are going to see it at the end of the presentation because first we need to analyze what are the difference of the two methods. And then we're going to see as one analysis using, actually, if you go to the last page of your Excel spreadsheet, you will find that there is an analysis page there. Well, I will explain that to you, right?
Okay.
Right now, just wait, please. So we will see that when we get there. But yeah, other than that, what we questions about what we have seen so far. That's what I mean. Like how to get this, how to get to the operating income, stuff like that. No, okay. So this was the answer. No, this was not. This is the answer that we got for the first case activity. And what you got is that the operating income in both of the cases it's the same. And the reason is because, and remember, your sales equals your production. And I have a question for everyone. When your sales equals your productions, do we have inventories?
Yes.
If you are selling what you are producing, like every single item
No.
in production, do you have inventories?
You didn't have.
No, you don't.
You don't have inventories. Why is that? Well, because nothing is left to storage. So what you are producing is what you are selling. And that's the reason why these two are the same actually, because there is not an inventory here. And you will see what I mean when we actually introduce the inventory in the next case. So what happens to the operating profit if we produce more of what we sold? What does it mean that if we have production bigger than sales? What happens if I produce 100 and I only sell 50? What happens to the other 50?
They are stored, right?
They are stored in something that is called inventory.
Yes,
Right?
it could be remaining inventory for the next quarter.
This inventory could be used for the next quarter, the next month, the next year, the next period, right? So well, yeah, what happens is that if I have a production bigger than the sales, what happens with the extra production, it goes to the storage. And if it goes to the storage, it means that I have an inventory and I need to evaluate this inventory. And also my production is not the same that my, the cost of my production is not gonna be the same as my cost of sales because my cost of sales is 50 and my production is 100, you see? So you need to evaluate two parts of the production to actually recognize it with sales. So this is what happens when we produce more of what we are selling. Let's see how can we see this in on numbers inside a report, right? In a finance report. So let's see this example. The same company that makes calculators, that's the example we are working on. Same level of production and price, but it only sells 12,000 units. So we are selling less of what we are producing. That means our production is bigger. So if I'm only selling 12,000 units, that means that I have how many inventory? Well, I produce 15,000 because it's the same level of production as the last one. And I told you here that I'm producing 15,000, you see? So it's just a follow-up of this exercise. So I am producing 15,000, but I'm only selling 12,000. So I have 3,000 units that I cannot recognize as cost of goods sold, right? These are actually inventory. An inventory, it's a balance sheet account. And this is the profit and loss statement. So these are two different statements. So what we need to do is actually take the ending inventory out of here and take it to the balance sheet. And that's what we are doing right now. Now, how do we know it's 15,000, it's 105,000? Well, wait, let me see if I put the answer here. So we know it's 12,000 units that we sold. That means that 3,000 units were not sold. So if we go back to the last exercise, you can see that the cost of goods sold of 15,000 units, 525,000. So if I go again to the absorbing costing method, you can see that I have the same level of cost of goods sold listed here. We have a different level here directly to the sales. That is because in this part, I am deducting the final inventory. So I need to evaluate that final inventory, 105,000. How do I do that? Well, actually, it's pretty simple. I have my I have here the cost of production. You see it? I did it in the previous exercise. I had my production variable and fixed cost. I have the total here. And all I'm doing is I'm dividing by the production, and then I have unit cost there. Okay. So I know my unit cost is 35, and I know well, I know my unit cost is 35. And before I move forward, just quick question: do you get why is 35? Just because I divide this, well, no, that's a percentage, I'm sorry. I divide this over this one, and it gave me this one. Yeah?
Yes. Yes, teacher.
So if I am saying that I am not selling the 3,000, that means that I need to take out 3,000. So how much is 3,000 times 35? How much?
100 and 500.
105,000 pesos. And that's the same number you have here, you see it?
Yes, teacher.
So all what we are doing is that we are taking out the valuation of our inventory from the profit and loss statement. The result is the real cost of goods sold related with those sales. So and that's it. Like difficult part in this analysis, the absorbing costing. Just take it out. You have again the gross income, and then you take both variable and fixed operating expenses here. You subtract them again, and then you end up with the operating income. And see that those expenses are the same expenses that we use from the beginning, all right? Because they are mixed, 75,000 and 50,000. So it's the same value, and that's where you find it, 125,000. Great. Now let's see the variable cost. What do you think is going to happen with variable cost? Well, for once, if you remember in the variable cost, there is like a mix. I mean, they are like they are not mixed like here. Here you have fixed and variable cost mix per category. That is a category of production or a category of operation. On the other one, what you have is a mix by behavior, and that is fixed cost and expenses are together, and variable cost and expenses are together. It doesn't matter if one of the expense or one of the cost it is used for production or the other one is used for operation. They are both they are mixed according with its behavior. So what's going to happen? Well, first off, if you have it by behavior, that means that only here, instead of having 525,000, you only have, because this was fixed plus variable, well, in the absorbing costing that is fixed and variable, in this one it's only variable. And remember, it's behavior. Remember the graph, fixed, variable, sales, all right? Fixed cost, variable cost, sales. Remember, money, and here is time. Okay. So,
where does the 375,000
come from? Well, it's the variable cost of the product, only the variable cost. So let's go back to the information, and you can see it there. You see?
Okay.
Variable, only variable cost is actually shown in this statement.
Okay.
So if only variable cost is shown as a cost, that means that our valuation of inventory, it's only going to take into consideration the variable cost. And remember, in the last one, it was 35,000 unit cost because it had both fixed and variable cost and expenses. Right now, we only want to have the variable expense to get our unit cost, and I actually have it here as well. And you can see here that the variable it's only 25 pesos. You see it?
Yes, teacher.
variable unit cost, right? And this one is the absorbing unit cost. So in this case now, instead of 35, we are going to use 25. We go forward. Here you have it. So, and again, it's the same. We have 15,000 units of production minus 12,000. That means that we have an inventory of 3,000. All right. And 3,000 times 25, it's how much?
75,000.
It's equal to 75,000. That is correct. So we're going to take 25,000 out of the income statement to the balance sheet. Right? We continue with other operations. That is, we add this up. We have the total variable cost of goods sold. We have the manufacturing cost. Then we have the sales and general. Remember, this is variable only. And the question you might be asking yourself right now is that, well, if we took 105,000 from this one and we are taking 3 minus 105, 1, 2, 3, and we are taking 75,000 from here only, where is the rest of the money? So where is the rest of the money? No idea?
On the operating income?
On the operating, no, it's on the operating expenses listed as a fixed cost. We are not taking the part, the proportion of 3,000 units from the fixed cost. We are leaving it there. So there is a 30,000 extra cost, if you want to see it like that, listed inside this 150,000. That should have gone to the inventory. We didn't. It stayed on the profit and loss. Right? Do you get it?
More or less.
So here we have 105,000, and remember, this number has a fixed plus a variable factor inside it. So in here we are taking out a fixed and a variable cost. Here we are only taking variable. So what happens with the fixed amount? What happens with the proportion of fixed cost? Well, that is inside the fixed cost of goods sold that is listed as an operating expense. So that's gonna what that's gonna do is that we're actually gonna have a lower operating income. Right? And the difference, which is here, it's the 3,000 pesos I was telling you. It's the fixed cost going to the inventory in absorbing costing. This cost goes to the balance sheet. That is in here, those 3,000 pesos go to the balance sheet as inventory. In here, they are listed as period expense. And if we see them side to side, you can see that the difference here and here, it's 3,000, which in this case goes out to the balance sheet, and in this case goes inside an operating expense, fixed operating expense. That's why this one, it's bigger than this one. Questions, guys?
So, teacher, for the balance sheet, we have to subtract the ending inventory of each case and then put it in the inventory of the balance sheet.
Yes, you will have to put it on the inventory inside the balance sheet, but don't worry right now because we are not working with balance sheets, so you don't have to do it.
Oh.
just know that the money goes out somewhere. And where does it go out? When you are working with more financial statements, you will know that it goes to the balance sheet. Right now, only work on the profit and loss.
Subtracting,
What?
but it is subtracting, right?
It's subtracting from the profit and loss and going adding to the balance sheet. Okay?
Yes.
Okay, perfect. So if there are no more questions, I would like to go to the activity. Let's just see, well, the explanation is the one that I was giving you. When units produce a credit and does so, that is when production is more than the sales. The absorbing costing will show a higher operating profit. Why? Because you have a bigger inventory. Going now to the balance sheet. The reason is that part of the fixed manufacturing cost, that's the one I was telling you about, which in the variable cost is shown as an expense for the period, right? Becomes part of the inventories. So the absorbing inventory, let's put it like that, it's greater than the variable inventory. The 3,000 units of inventory that leave the income statement go to the balance sheet, carry a load of 30,000 of fixed cost. That is 3,000 units times the fixed part of the unit cost. So if we go back to the first one, you can see that the fixed production cost, it's divided into variable and it's divided into variable and fixed. This is the part of the cost that goes out to the balance sheet. Right? So let's go to the breakout rooms and work on case number 2. You have any questions before we go to the breakout rooms?
No, teacher.
I will be visiting the breakout rooms anyway, so to answer questions in case you have. Before I start the breakout rooms, could you please tell me if you can share your screen? Is it enabled?
Sure.
Yes, it is enabled.
All right.
Teacher, the breakout rooms are supposed to be in the teams we have?
No,
Okay, okay.
no, don't worry, Agustin.
Okay, thank you.
So you didn't get to a breakout room?
No, yes, but we had that doubt. So
Okay, which one is your breakout room?
the number 1.
Number 1. Well, actually, I'm gonna put you in number 3
Yeah, I
because
can get back, don't worry.
no, one has already 7 participants. Hello.
Hello, teacher.
So, where's everything going? Okay, remember one of you has to share the screen.
Yes, maybe if you want me, I can share my screen.
No, what you decide is okay. Just remember, try and share. So I'm gonna go to another breakout room. Please, one of you share your screen, so he or she can solve the case. Help with the other people. So remember, one of you has to share the screen, guys. That's the whole point of the activity. The dynamic of the activity.
Yeah, sorry, teacher. We are just looking for the case.
Okay.
De que el 1.030.000, ¿no?
Tienes que multiplicar lo que manufacturas. Ándale.
O sea,
Ok.
primero tenemos que
O sea, según yo se
La
multiplica
producción.
primero 85,000 por 25,000, perdón, por 25 pesos, ¿no? Para saber
Sí.
Sí, sí es por el precio, ¿no?
y después le vas a restar, o sea, la multiplicación de 25 por lo que te quedó en inventario.
Oigan, ya sé, ¿le puedo dar el control a alguien?
No, you try. You can do
Bueno,
it.
ok. Oh, yeah, I'm gonna try, but he said, okay.
So start with sales.
Okay, sales here. All right. No, he said I'm lost. Okay,
In
wait.
cost of goods sold, you're gonna multiply 25,000, no, yeah, 1,000 plus the unit price to know
Okay.
the cost of goods sold.
All right. And where do I write it?
In cost of goods sold,
Here.
yeah,
No,
one,
arriba.
ajá, dos arriba, dos arriba.
Donde dice Cox. Ahí.
Ándale,
Ahí.
Cox. Ahí, equals.
Okay, ¿qué es lo de?
O sea, lo que
Es
manufactura.
85 por 25, ¿no? Dice.
Sí, ahí arriba está.
Sí, 85,000 por 25.
Okay.
Ya.
Tener
2 millones, ajá, sí.
25,000. Ajá.
Ahora, tantito, yo te recomiendo que ahí donde dice inventory, ya ves que arriba dice inventory arriba, ahí resta 85 menos 50 para saber cuánto es lo que no estás vendiendo.
¿Dónde dice
Ok.
inventory? Ah, ya.
Ahí,
There.
ándale.
Okay. Okay.
Y ahí, o sea, en ending inventory, o sea, en la de la rayita amarilla,
Ujú.
esos 35 por 25,
Okay.
No, wait.
¿no?
Why 25?
Because that's the cost.
It will be 5, ¿no?
Cost.
No, sería el por unidad, ¿no?
Yes, but which one?
El 12. Porque es el absorbing.
So do you all agree with that?
Sería el variable, ¿no?
No, creo que sí es el 12.
Ah, es 12, sí.
I mean, if you multiply it by the 25, you're multiplying it by the sales
Oh,
price.
Yeah,
You get
okay.
it?
Yes.
Yes, okay. Continue. You're doing great. I'm sorry for
So,
interrupting.
so teacher, the first one is multiplied by 25, and the second one is by 12. But why?
The first one, when you say the first one, do you mean the
Cost of goods sold.
absorbing?
The
No,
cost of goods sold.
both are multiplied by the unit cost you are using.
Okay, then we have to change the
That's what I was telling you, like why 25?
I don't know.
Because
So the H5 should be replaced with H10. So you can just put 10. Yeah.
Okay.
Okay.
And explain your classmates why.
Yeah, because sales are measured with the price.
Yes, and cost is measured with the cost.
Yeah, but here we're not calculating the sales, or should we?
You should, because you are building the income statement, so you are missing the sales.
Okay, yeah. So in the line of the sales, put the 25 units per.
Nel.
Pero ¿eso es con información del raw case o con qué? No entiendo.
Ni idea.
You need to read it with the information at the top. It says information there, you see? Wait a second. Why are you working on case 1?
Oh, we thought that was the one.
No, but teacher, this is the document that is like in the part of today. Look, it also says variable and absorbing costs.
Visually. Yes, I know. Well, it's the same one that you downloaded last class. And last class we did the case one and the inventory origin.
Last class we did this, right?
That one and case one.
Okay, so now we do case 2.
You should be doing case 2, right?
Okay, perfect.
Entonces, solo lo restas y lo multiplicas.
Ah, entonces era eso. Lo de las unidades.
A ver, entonces, ¿cómo fue? Perdón, se me fue el internet un poquito.
Sí, es que arriba dice que vendió 50,000
Ajá.
y dice abajo que produjo 85,000.
Ah, entonces aquí el ending inventory sería 35,000, ¿no?
Pues lo resté 85 menos 50 y me dio 49,915. Y ahora eso hay que multiplicarlo por algo.
Por
85,000 minus 50,000, it's 45 something?
It's
¿Mande?
35,000, right?
I subtracted 85,000. I
Minus,
think my Excel is wrong.
yeah.
Yes. We grab another cell.
Teacher, los 25 que puso en el ejemplo, ¿de dónde salieron?
Well, in the example, it was the variable unit cost.
Ah, ok.
So
Era-
here it's the variable unit cost as well.
Que son los...
Which one is the variable unit cost?
Estos, ¿no?
Well, variable unit cost, yeah.
Bueno, es el 7, de 7.
Yeah. I mean, I think you are the one who is writing on, I don't know whose script.
Yes.
Yes, that's it.
Ok, entonces, eso es como te dijo Nadia y ya al final se multiplica por los 7.
I've got for
Entonces, si era esto, por esto,
Hello.
Hi, teacher. I have a question. I don't know if I'm okay. I don't know. Like, I think I did it right, but I'm not sure. And I think some numbers are not.
Okay.
I don't know what I really did. Like,
Yes, can you check it, teacher, or the result or something?
So let's see the difference. Look at the last yellow thing. It says the difference. The difference is the fixed cost going to the inventory and absorbing cost. This cost goes to the budget. So let's see what the difference is. Go up to the inventory that you evaluated and multiply that 35,000. Multiply it times the fixed cost that left to the.
this one.
Oh.
Yeah.
Oh.
So that's the difference that you should have, and you have 75,000.
I think I know why.
Teacher, instead of the 424,000.
Still, it's weird. I know. No, I don't know why I had this.
I don't know about that. It's 1,250,000. Okay, so look at the variable cost. No, look at the variable costs. The variable, well, the variable method, right? So in the variable method, look at the cost of goods sold and tell me what do you think is wrong with that? No?
Because you have to use just the variable.
Because you have to use just the variable, exactly. And you are not doing that. You are taking again the fixed cost. Now you need to take the variable in both of the cost when you are doing the variable costing. No. Well, these are going to be activities inside the exam, guys. So you really need to understand what you're doing.
Yes, I don't really understand. Like this topic, I didn't understand.
Yeah,
I
me too.
thought with this exercise I was going to, but then here it's negative. So
Yeah, but the reason is because you need, I mean, check again the cost. Exactly. Check what you are doing. Okay, there you're only copying the number because we told you, all right? But can you tell me why are you using only the fix there?
it's variable.
Okay, so if that one is a variable in there now in the cell you are standing, what you should actually have?
In sales?
No, on the cell you were standing, cell, non sales. The cell you were standing was the ending inventory cell. That
So
one.
here will
Yes.
be
Exactly. Now we're moving somewhere. Now, why did you have 580,000 again on total variable?
I think I don't know.
So what number should you have there?
The addition of these two?
Addition?
Yes,
Why addition?
because it says total variable of COGS. So this one?
Well, yeah, but explain to me why addition. Why are you going to add both the inventory that you are selling and the inventory that you are not selling to your cost?
I don't know, it sounds logic in my mind. I don't
It
know how to
sounds
explain.
logic that the inventory that you are not selling, you are going to report it as cost of goods sold.
I don't know.
What is then logic?
I don't know.
The logic will be that you only report what you are selling, right?
So you need to subtract, no?
So what happened with your other classmates? Like they aren't here or what? Are you
Yeah,
guys
yes.
following the exercise?
Yes, teacher, but I don't know. Really, I'm so confused.
And I'm trying to understand and help Renata, but
So if you are selling something and then you are going to report what you sold, you only report what you sold, right?
yes.
So we have listed there cost of goods sold 45,000 pesos on variable cost. That's the cost of our production. But we only sold.
Oh, yes. You only need the cost of what you sold.
Exactly. So what do you do with those two numbers? With the 500, the 450,000 and the 185,000?
Just
Subtract?
You subtract them exactly. Who say that?
Me, Renata.
Nice, Renata. You're really smart. Okay, you subtract them because you are only going to report what you sold. That's the
So
reason.
here is the same thing.
There is
yes,
the
I did
same
the same
thing.
thing.
There you have it. The stuff you did it. So that's why I was like, what? Okay, now you did that. Now let's do the manufacturing cost. All right. So there, why are you?
I don't know. This one I really don't know. I think I copied wrong something.
Okay, so what you should have there actually?
It was that?
No. What my question was, what you should have? There, actually,
We should subtract, no?
yeah, you should subtract the sales.
The sales and the total variable
Yes,
cost.
exactly. Good. Now it comes the sales and general. And why do you have 176,000?
Because we put the total, so it has to be just
exactly. You have
variable, right?
Yes, exactly. And what is the reason? Well, because here you are only working with variable costs.
With variable costs.
Yes.
And we subtract here.
And then you subtract there,
And this.
Okay, and now again check the fixed costs and fixed sales in general.
It's the same, right?
It's no, it's the same. You need to take the only the fixed part now, because now you are not separating by operation or production. You are separating by function.
So fixed cost.
So fixed costs and fixed. Yes. So what's the difference now?
It's okay.
It's okay. The difference has to be the inventory that you are not selling.
Okay, so basically in the first one, yeah, we put everything together. And in the second one, we just take variable till here.
Exactly.
Like till here, and then you, in the fixed costs and fixed things, we put like everything together. Like doesn't matter the inventories, but in here you take account the inventories, right? Something like that.
You do take the inventory in both of the cases. The difference is that the inventory on the second case is only variable.
Okay.
And please change on the line D37 where it says manufacturing cost.
37
D.
Here.
D. That's K. That's column K. D. Column D. D37. Change the word cost to profit, please.
Okay.
Perfect. Okay. Would you guys please just review it because I have someone asking for my help in another room. So review it. You did it right. You were doing it correctly in the first one, but then you got confused. That's okay. It's the first time you do it, but you are doing it right now.
Okay. Thanks, teacher.
Teacher.
What's up?
Hi, teacher. We have a quick question about how to calculate the manufacturing cost.
Okay. Why do you
It's just that we don't.
Why you don't have sales? Well, that's my first question for you.
Well, I think we skip it. We just went straight to calculate the cost.
Okay. Remember to put it because otherwise you won't get to the operating income.
Okay, sure.
What was the question? I'm sorry for interrupting you.
It's okay. The manufacturing cost is just that we have a question on how to calculate it. We really don't remember.
Well, actually, I'm sorry for that. It's a little mistake. Please go to where it says manufacturing cost and change the word cost for profit.
Cost for profit?
Yes, please. Cost, no manufacturing. Manufacturing was okay.
No.
Click escape. Escape.
No, what?
Well, erase that and just write manufacturing profit.
Okay.
Manufacturing profit. Now it makes sense, right?
Okay.
How do you calculate the manufacturing profit? Well, you subtract the sales from the cost, variable cost.
Okay, so then what we will be needing to do first is to calculate sales, right?
Yes, sir.
Okay, thank you, teacher.
Sure, I have another question.
What's the other question?
In sales, I get the same as cost of goods.
Well, if you are getting the same on sales that you are getting on cost of goods sold, that means that you are using the price, not the cost. Or you're using the price, not the cost to calculate the cost, or you are using the cost, not the price to calculate the sales.
Oh, yes. Thank you.
You're welcome. And also you should have valued the inventory. Okay, someone is calling from another room. Please do your sales, calculate your inventory, and remember that the absorbing costing, it's both fixed and variable cost inside the cost of goods sold, and the variable costing is only variable cost inside the cost of goods sold. So those two numbers cannot be equal.
Okay, sure, teacher.
Yeah. Okay.
CGA.
Ajá.
Ponle donde dice fix de CGA, que son 120,000.
Ok, perfecto.
Creo que es así,
Llegó
¿no?
el
Y
profe.
¿Ya?
No, but continue. You're doing great.
We don't feel like doing great.
We wanted to ask you the part of the manufacturing cost, no?
Sí.
Yeah. We wanted to
Sorry, it's not manufacturing cost, it's manufacturing profit. I made a mistake.
Okay.
Oh, so if it's profit, then I think our formula is good, right?
I mean, now it makes sense, right?
Yeah, it does.
But the formula is right.
Yeah, because it's profit, yeah.
Perfect.
But then how we get to the contribution margin?
Well, now you need to add, I'm sorry. Well, actually, that's something I should be asking you. How do you get to the contribution margin?
So we just made, so considering that this one is now a manufacturing profit, then we can put the SGA here. So the thing is that we could do something.
You have to put the SGA exactly.
This is
with the.
This is your money. So and this should be a loss or like a cost. So
that
then
should be an expense, yes.
So you're just going to subtract this too, right?
Yeah.
Exactly. What do you have to put there?
So put the
fixed and fixed of the cost of goods sold and SG&A.
So it could be like, but we hadn't calculate those.
It's this one, right? The SG&A total.
No. Remember, here you are not separating by function. You are separating by behavior of the cost and expense. And the behavior here is variable versus fixed. So which one you should put there?
The fixed.
I never get how you
What?
I don't get how you do that. Like, I'm trying to write on the Excel, but I can't.
You write.
Yeah, no, but I don't have that. I just have viewing option, request control. I have it here.
You can also request. Nice, happy face.
Great. Okay. So. Now I have the resume.
Pero el contribution margin creo que es un abajo, ¿no?
Sí, está aquí.
A ver, píqueme ahí en el rengloncito.
Sí. Pero entonces, ¿cómo llegamos al CGA?
Now, get this. Here you have variable only, all right?
Okay.
So this, in this part, you should only have
cost of goods sold,
yes, variable, all right? And from here to here, you have what? You have fixed, right?
Yes.
So if you have variable here, what should be in here?
The fixed.
Does it?
No, the variable.
Okay, so if it is variable, what number do you take from the SG&A?
56,000.
Variable, yep.
Okay.
And then just subtracting the.
O sea, sería 985,000 menos 56,000.
Ajá, sí, ¿no?
Okay.
Y ya da el contribution margin.
Profe, yo tengo una duda. In the sales, we have to multiply.
No, todavía no. Ese en SG&A va directo el 56 y luego en la de contribution ya haces la operación. Ajá.
Yep. Now, what was the question? I'm sorry, who was asking the question?
It was me. In the sales, it's okay that we multiply per the unit per the amount they sold, not the amount they manufactured.
Exactly. Yeah.
Okay.
You have to multiply by the sales and the price.
And
Okay.
then teacher, so for this section, what we're missing is just summing. Let me draw it as well. Summing this
The
to
fixed.
here
Yep.
and subtracting
And
from this one,
subtracting.
right?
Yeah.
Okay.
And is everyone getting what we're doing here? Like, because I'm feeling that only like 3 people are participating.
Oh yes, teacher.
Oh, yes. I
Really?
was a little bit lost, but I think I'm getting there.
Okay.
Yeah.
Teacher, but what you told Nadia, the part of the sales?
So you need to multiply the sales number,
Yeah.
that is the sales units, times the price of sale.
Okay.
You did that here? You did it?
Yeah, we did, but I have my doubts.
Okay.
So I'm getting asked to another session. So I'm gonna leave. You are doing great. Remember the compromission part. It's at the bottom. That number should be the same as the inventory going to the absorbing costing. Right. Right now you have 468,000. So I don't know if that's not correct. You just check it, please.
Okay.
Okay. Thank.
Hello. You finished?
Sure. We have a question about the exercise.
Okay.
What do we have to put in contribution margin?
First off, I'm gonna ask you to change something that I got mistaken. Where it says contribution cost is actually, I'm sorry, where it says manufacturing cost, it's actually manufacturing profit.
Okay.
There. Profit. So that makes a lot more sense. And that's a rest, that's a subtraction from the sales and the variable costs. And the contribution margin, it's the manufacturing profit minus the variable sales general administrative.
So it would be resting these two, right?
Yep.
Okay. Thank you.
But I don't know if you are actually doing it correctly, like the numbers that you have on inventories and on production.
Actually, we have a doubt. How do we obtain the inventory?
Remember that, well, you just had to subtract again the amount of what you produce minus the amount you sold.
So it will be for
how much you produce? 85,000, right? Manufacturers 85,000.
okay.
And how much you sold?
Okay.
50,000. So 85 minus 50. That'll be your inventory. Now, what is the value of that inventory in absorbing costing? Well, the variable, the fixed part of the inventory, that is anyway, it doesn't matter. Just keep with the exercise and you will get what I was talking about when you get the difference. But check the thing that you are doing with the inventory on the absorbing costs.
Okay.
All right. So where did you get the 1,030,000?
This one, we picked this number.
Remember to use formula so you can always remember where you got it.
Okay.
So that's the what? That's the fixed cost, and the variable costs add up, right? For production.
Yes.
And the reason you are adding them up on the absorbing cost is because you have the mix there. Okay?
Okay.
Great. Now, why are you subtracting 85,000? 875,000.
No,
I don't
actually that
remember.
was a mistake.
No?
No, I think that number doesn't go there.
This number here.
This one.
Yeah.
Like how we got it, or?
Yeah, how you got it. The things that you don't have formula, you see? And because you don't have formula, we cannot see where you got it.
We subtracted the manufactured units minus the ones we sell, and then we multiply that by 25.
25 is the price.
But is that the price it's being sold at, or the price?
Yep, and actually, how did you get this one?
This sales one? I think that was just the 50,000 times 25. Yes.
Like that. So
Yes.
you do know this is the sales price, because these are the sales in it, right?
Yeah.
So why are you using the sales price to evaluate the inventory?
No idea.
Some help from your other classmates. Hello, guys. Are you there?
Hi, teacher.
Hi. Yeah, I
So
don't have idea neither.
you have an idea? So what's the idea?
No, I don't have idea.
You don't have any idea. Okay, so let's try to get an idea, everyone. We have the sales, which is 1,250,000, and then we need only to register the inventory, all right, that we sold. Okay, how do we do that? How do you get to that one? Remember, here you have the cost. You see it?
Ah, okay. So then it,
No. Try and participate. Where's the who's here? Diana, Diego, Maite, Rebecca, Santiago. Any thoughts on how to do that? How to do what we're trying to do? Santiago.
I already tried with them, but I don't get it.
But any ideas what we should do? No? No one?
Maybe we can multiply the sales by the price, no?
You did that already there.
Oh, and then
No. I think you are the only ones who haven't got it. So I think I'm gonna finish the breakout rooms and I'm gonna show you the answer. Okay, but I need you guys to pay attention to the answer. This is I actually going to put exercises like this on the exam. Okay.
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 Hello guys, so I think most of you got it. Let's see the answer so we can move to the next one. So the answer is this here, and let's review it on the Excel. So if you didn't get it, you can work on it, all right? Please interrupt me if you have any question so I can explain it again. So we have two types of reporting, the variable and the fixed one. I'm sorry, the variable and the absorbing. So let's do this. That's absorbing cost. It's here. Okay, so let's work on that first. So the first thing you need to do is you need to get the sales. So we just have to multiply sales times the price. Remember, the price is different than the unit cost. The price is the number at what you are selling your products. Second thing is that we need to take out the inventory that we are not selling. Now, how do we get the number of inventory that we are not selling? We need to evaluate the inventory. So the first thing that you do is you evaluate the inventory. So 85,000 minus 50,000 those are the units that you are not selling. So all we need to do now is just multiply the units that are not selling by the cost of those units. And in absorbing costing, the cost is the fixed cost. You see it? The fixed unit cost. No one is asking me anything, and I was in a few groups, in a few breakout rooms where you didn't get it. So are we cool right now? It's everything okay?
Yes, teacher.
Now, yes.
Yes, teacher.
Yes. Okay, so that's the number we need to take out. Take out from where? Well, from the manufacturer cost. And because we are using absorbing method, the manufacturer fixed and variable cost. So we multiply manufacturer times 12.118, right? And the subtraction of those two, it's actually my total absorbing cost. Great, now I have my cost. All I need to do now, yes?
Can you repeat the one that is COGS, please?
Yes, it's just a multiplication of what you manufacture times the fixed and variable unit cost. This is the division between this one and this one, or the addition of these two.
Okay, thank you.
You see? You subtract that and you get the total absorbing cost. Then you subtract from the sales the total absorbing cost and you get the gross income. Now we go to the operating expenses. And because this is absorbing method, we have it mixed here. All right? Variable and fixed, it's the same for us. We just add them here, and that is our total sales general administrative. The subtraction of those two is my operating income. So far, so good, guys?
Yes, teacher.
Yes.
Are you all sure you got it?
Yes.
Yes, in English, perfect. So now let's see the variable, okay? So the variable is the same, but with one minor difference. And the minor difference here is that while in the absorbing cost, we have the separation by function, that is production cost, and then operating or period expenses. In the variable cost, we're going to do the separation, not by the function of the cost or the expense, but by the behavior of the cost or the expense. That is where if it is fixed variable, a fixed cost or a variable cost, a fixed expense or a variable expense. Okay, that's the difference. So if that's the difference, let's start. And the first one is the sales. We always start with the sales, and it's the same. 50,000 times 25. It's the sales from the period. Okay. Now remember, we only gonna use the variable first because we are separating variable and fixed. So if we are doing that, our cost of goods sold manufactured cannot be the same one as the absorbing, because here we are using fixed and variable. So here we only want to use variable, okay? So if I double click here, you can see that I'm using, it's the same formula, but instead of multiplying by 12, I'm multiplying by 5. And why 5? Because 5 is the variable cost. Yes? No?
Yes.
Yes, teacher.
Great. So again, we only need to report the cost of what we are selling. So what we need to do is we need to take, well, let me erase this one because I was checking it. We just need to take the inventory that we are not selling and evaluate it again. But in this time, we use again the variable, because remember, we are doing a division of costs and expenses by the variable and the fixed. If I see here, you can, if I double click here, I'm sorry, you can see that here I use the fixed and variable unit cost. That is the absorbing method. In this one, I'm only using the variable. You see it?
Yes.
Yes, teacher.
So the subtraction of those two is my cost of goods sold on variable. Now, I made a mistake here. I had it manufacturing cost. I think I told everyone to change it. If you didn't, just change it to manufacturing profit. Please, that was incorrect. So the manufacturing profit is the subtraction of the sales minus the total variable cost. Now, right now I have a manufacturing profit. I need to build my contribution margin. And remember, in this part, I am separating variable and fixed cost and expenses. So the next one should be a variable. We're no longer a cost, because the cost is already inside the cost of goods sold. So we are gonna take the variable sales, general, and administrative. Yes? I felt I say that too fast.
Teacher, the one that was manufacturing profit was the sales minus what?
Minus the variable cost. Yes?
Yes, thank you.
Yes,
Okay.
teacher.
And again, this is just the sales and general on variable, right? And the difference between the manufacturing profit and the variable sales general administrative, it's my contribution margin. So we are moving on the right direction. Now we need to subtract the period expenses, but wait. Now there is no such thing as period expenses. Now it's fixed. Again, here's an error. It's fixed cost and expenses, not fixed and variable. I'm sorry, please change that. So now we need to subtract the fixed cost and expenses. So I'm gonna take my fixed cost and my fixed expense, and I'm gonna subtract, I'm gonna add them up here, and that's what I'm going to subtract from the contribution margin. I don't think there is so much science into that. You just take the fix and put it here. The difference between the two profits should be the inventory that went out in the absorbing method. So if I go up and multiply the inventory times the fixed cost, it should be the same number that the difference I got from the two profits. Incomes, I'm sorry. So that thing is 0. It means I did it correctly.
Can you repeat that for teacher, please?
The difference between the two operating incomes should be the inventory going out on the absorbing costing with the fixed part. So what I do is I take the inventory and I multiply it by the fixed element, which is 7 pesos in this case, and that gives me 38,824 pesos. So the difference is this number here. You can see it that I did as a difference. I take it here and I take it here, you see, it's the same. And I just do a subtraction, the number is 0. It means I am correct.
Teacher, but why the fixed cost?
Because in absorbing method, the fixed cost is going out of the balance sheet. To the balance sheet, I'm sorry.
Okay.
Yes, everyone?
Teacher, in which part of the balance sheet we are going to put this?
Don't worry, you're not gonna put it on any part. You're not gonna be working on the balance sheet in this part of the module, right?
Okay.
This is for analysis purposes. The balance sheet you are seeing with Sanson, you are gonna treat the balance sheet as he tells you to treat it, okay?
Teacher, can you put your mouse on the 238,000? Arriba, ¿dónde está el inventario?
Which one? This one or this one?
El de arriba primero. Espera. Y después el de abajo, por favor.
What comes from here and this here is the difference between these two. I'm sorry.
Okay.
Okay.
Okay. Entonces siempre, always you have to have like 0, right?
Yes, sir. Between this and this one.
Okay. Thank you.
Yep. So if we were actually building a balance sheet using this information, you will put it in the ending inventory of the period. But we are not doing it right now, so don't worry about the case in this particular part because this is just a evaluation method. This is an analysis, I'm sorry, okay? It's a way to analyze income statement and manufacturing costs. So I want to move to the case 3 because maybe we can finish variable and absorbing cost in this class, but I don't want to move to that if this wasn't clear. So please open your microphone. What?
It is clear, teacher.
Is it clear?
Yes.
It's clear for Carla, for Sofia, for Luis.
It's clear, teacher.
Yes, teacher, it's clear.
What happened with Guillermo, Diego, Isabel, Jasper, Jorge, Juan, Padilla?
I understand it, teacher. I have the correct data now.
Yeah, me
It's clear
too.
too for me.
Yeah, Victor, Sofia, Santiago.
I think so, teacher.
Rebecca.
Yes, I understood. Thank you. Oh, well, just one thing. Why are we doing this? What is the like the
What is the
purpose?
point?
Yeah, yeah.
To learn it. It's an analysis
Oh, yeah.
tool. It's an analysis tool, Sophia.
Okay.
When we get here, you will see how to use it to analyze something.
Okay.
All right.
All right.
Right now, I'm just teaching you how to do it, but here you will use one of those methods to analyze it, and I will show you how to analyze.
Okay. Okay. Thank you.
So that's the reason why we are doing this. It's not just to just consume class. Don't worry.
Thank you.
Well, everyone else, is it clear?
Yes, thank you.
So let's move to the next one. If everyone, I think everyone is happy. So let's see now what happens to the operating profit if less is produced of what is sold. What happens if I sell if my sales are bigger than my production? What happens if I am selling, Jesus? What happens if I am selling 100 where I only produce 50? What does it mean?
You have to outsource.
To outsource?
Yeah, like if you're selling 100 and you just produce 50, then you have to get those other 50 from another company or another place, or increase your production.
Or
reduce your sales.
Te comprometes a dar tus productos después.
What happens when I produce more of what I am selling? If I produce 100 and I am selling 50, you remember what this thing was called?
Era lo del surplus, bueno, como un excedente.
Inventory, right?
Mm-hmm.
So what happens if I am selling more of what I'm producing in one period? Leslie? You say outsource, and it's actually the right idea, but you don't outsource from another company, you outsource from another period, because the previous period you had an extra inventory.
Oh, okay, from your own inventory.
From the previous months, you see it?
Okay.
But you had the right idea, okay? Because you were like, well, if I don't have it, I need to take it from somewhere else.
Okay.
So that was correct, and that's what you should be doing. You need to take the inventory from someplace else, and the place where you get it is from the previous production. So let's see again an exercise, and the calculated company has a beginning inventory. This is our beginning inventory, and it's the same one as the one we didn't sell here. You remember 3,000? Where's 3,000? It's here. So the next period, now we have an inventory of 3,000, and I have a manufacture and I only manufacture 10,000. It happens that I'm going to sell 3,000 at 50 pesos. All right. Remember, sales, it's unit sold times the price. Okay. Price. How do you do that? Well, it's related to sales. Cost, it's related to production. Why am I writing this? That seems obvious. Well, because I saw in some of the breakout rooms that you were mixing price and cost. Those are not the same thing. Okay. So anyway, we have the information. Let's move to the analysis. And now I have different production costs. You see it? I have this one and I have this one. So my unit costs are different. The unit cost for my beginning inventory, it's this one here, which is actually the previous one that I had. Let's go to that one. Patient here, you see, 35. So that's the cost for the units of inventory. There, 35. But the new units, the new production of 10,000, now they have an increase of 10 on the unit cost. That can happen. Remember when we were seeing standard costing, there is a possibility of a variation on the costing. So that's possible to happen, and it happened in this example. So now we have a different unit cost for the next 10,000 units. So that's okay. We have it identified, so don't worry. And then we have the variable sales general administrative for this new period. They are here, and the variable is this one, divided by this one, and now we have 5 pesos here. Okay? Variable, this is the new production. This is the old production. So that's the information I have, nothing different. Well, notice the difference here, it's that now we have different production costs. So we have 2 major differences. The first one is that we have a beginning inventory. The next one is that now we have a production cost different from the 2 units. I haven't done anything, I'm just explaining the information, guys. So we haven't done any special calculations. These numbers here is just the division. 300,000 divided by 10,000 is 30. Just that. It's nothing out of this world. Now let's get down to the absorbing method. And remember, we need to evaluate the inventory using the fixed and variable unit cost. And the first thing we do is we start with the sales, and the sales is 3,000 units times 50. Times 50. That's here. So let's start with that one. 3,000 units times 50. This is 650,000. Do you all agree with that?
Yes.
Yes.
Okay, perfect. Well, now we have a problem. We only have 10,000 units to be sold, remember? So let's first evaluate those. So we manufacture 10,000 units. So let's evaluate the 10,000 units here. 10,000 units of production times my production cost, which I know is 45,000. That's the number I have here. Now I only no one corrected me here. It's 13, not 30. Okay, so but I only producing 10,000, and I have sold 13,000. So from where do I get the other 3,000? Well, from my beginning inventory. So I go and I take 3,000 and I multiply by what? By my unit cost from the previous production, all production, you see, which is 35,000. I mean 35 pesos. So I do that, and that should be the 3123 times 35. It's 105,000. And right now, inventory is not going out, it's actually going in. So we don't need to subtract, we need to add. So the addition of these two, it's this number here, 55,500 pesos. Okay? Inventory coming in.
Teacher, I didn't understand that.
Which part?
Like the inventory going in, what do you mean by that?
It means that I only was able to produce 10,000. So just as Leslie, you are Leslie, right?
Yeah.
Well, you were saying, Leslie, if I only have 10,000 and I need the other 3,000, I need to get it from someplace else.
Yes.
So I get it from my inventory, but that someplace else has a different unit cost. It's 35 instead of 45. So I multiply that one plus that times that one, and that gives me this number here. Okay?
Yes.
And because that number is now part of my sales, what I need to do to get the right manufacturing cost is I need to add them up.
Okay.
So the addition of those two is this number over here.
Okay, yeah, I got it now.
Okay, everyone got it? Abner, Agustin,
Yes,
Ana Paola, Andrea,
Yes.
David, Diana.
Yes, thank you.
Diego, Guillermo, Isabel,
Yes.
Jasper, Jorge, Juan, Carla,
Yes, teacher.
Leonardo, Luis, María, María José, María Marín,
Yes, teacher.
Maite, Nadia. Those like last four didn't answer. Sofía, Misael,
Yes, teacher.
Rebeca, Renata, Santiago,
Yes,
I get
teacher.
it.
Víctor, Sofía Padrón, Víctor González.
Yes, I got it. Thank
You all
you.
got it. Okay, so the next part is we just need to find the gross income. So that's actually pretty easy. We just are going to subtract from the 650,000 the 550. That gives me my gross income. And now I need to add, all what is left is just to add the sales general and administrative to my income statement. It's here, and the subtraction of those two, it's my operating income. In this time, and at this moment, it's a loss. That can happen. So that's the absorbing costing. Now let's see the variable. We start with the same thing, and the same thing is 13,000 times, well, what's 50, which is my price, okay? That is the number here. Now, we need to bring inside the variable income statement inventory, we need to bring it as variable inventory. So, Leslie, what number should we be using for the 3,000 units that we are going to be bringing here? What should be the number that we use for unit cost?
The 45.
Let me go to the information, and remember, this is something that we have from the old production.
I know, 15.
It's from the old production, and it's only the variable. So which number should we be using?
10.
25.
25. Why? Because 25 is the variable. 10 is the fix. So, yes.
No, yes, I think I can see quite clearly because I don't have my glasses, that's all.
Okay, don't worry. I think you get it. So 3,000 times 25 is 75,000. Great. And now we need to get the production, which is what? Well, it's 10,000 times the variable cost for the new production. And what is the variable cost for the new production?
15.
Oh, it's actually
30. Is 30?
It's 30. It's 30.
Yes, 30.
1 times 30. That should be 300,000. So the addition of these two, because again we are bringing in inventory, it's this number over here, and it's manufacturing profit. I have it in Spanish. What the heck? Okay, so the subtraction of these two is my manufacturing profit, which is 275,000. Now I need to put inside the general expenses with only the variable. So I go back and I have my variable sales general administrative here, which is actually 75,000. You see it?
Yes.
Variable. Okay. So that number is here, 75,000. The subtraction of those two, it's my contribution margin, which is in this example is 200,000. And now I need to put all my fixed expenses here, and my fixed expense are cost here. And my fixed cost, it's this one. I'm sorry, not that one. This one here and this one here. 150,000 and 50,000. Now, I'm gonna stop here because you should have a question right now.
Yes, teacher, I have a question.
What is your question, Kate?
In the first one, why did you take it from the old production in variable?
The 75,000 you say?
Excuse me?
The 75,000 you are saying, like why did I get it from the old production?
Yes.
because this inventory comes from a previous production. Yes?
Yes, but in the absorbing, you also take from the, yes.
In the absorbing, I also take from the old production because those 3,000 come from this production cost.
Okay, thank you.
Thank you. That nice question, Katia. But that wasn't the question I was expecting. So I'm gonna put the numbers again, and I need you guys to see if I'm doing something weird. So now I need to add my fixed sales and cost. So I go to my information and I only take the fixed sales and cost from the current production and the current period. That is 150,000 and 50,000. And that's the number I put here, which adds up to 200,000.
Teacher, could you please repeat that? I got kind of lost.
Yes, I need to add up my fixed cost and expense of the period. So I only take the fixed cost of my period production and my fixed sales and general from my current period. Current production and current period, I'm sorry. That's the number I put here. And that adds up to 200,000.
Okay, thank you very much.
So that will, like in an analysis, it would say that we're selling to cost production price.
I don't
Because
understand
we're
the
not
question.
earning anything.
Well, in this example, yes, we're not earning anything. You are correct, and we or direct and manufacturing costs, it's actually equal to our selling price in this analysis. Thank you, Leslie. That's a nice insight. What I was actually hoping that you guys ask me is, teacher, why are you not adding up the fixed 30,000 from the beginning inventory? That is from the previous production. And well, the reason is, and if you notice here, it's the same difference of what I'm not adding. You see? You see? The difference between these two, it's actually 30,000. And why I'm not adding that? Well, because I already registered this on the previous month. It's here. Right? I have already put inside my variable profit and loss, those 30,000. So in the next period, I don't take them into consideration because I already have them. I only need to take the current production fixed cost. And the difference is 30,000. Okay, the difference is the same fixed cost from the previous one. And let's see now, like the notes, just as Leslie was saying, when units produced are less than those sold, variable costing will show a higher operating profit. Why is that? Well, because the difference is the part of the fixed cost of manufacturing the inventory, which in the variable cost was shown as an expense from the previous period. That means that the 30,000 was already shown on, if we are on period 2 right now, period 2, let's say the period 2 is now in this example, we already registered on period 1 these 30,000, so we are not supposed to register them on period 2. That's the difference. And that's why you don't use this method for general reporting, because here you are reporting the previous, inside the previous period, units that you sold until period 2. All right. So what I'm saying here is that I sold 30,000 I sold units worth 30,000 pesos, but I registered the cost in the previous period. That's why we don't use variable costing in reporting standards, because this means that you are not actually registering the cost in the correct period. The 3,000 units of initial inventories that enter the income statement in absorbing costing carry a load of 30,000 of fixed costs. That is, on this one here is variable, all right? On absorbing cost on period one, period two, we didn't register the 30,000. This one is not on this period. It's actually being registered until we are selling it on period two. And that's why the operating income is lower on the absorbing costing. You see, here we have a loss, and here we don't have it. So that's the reason, guys. Any questions?
No.
I bet that.
Teacher, could you go back one more time to the variable part?
Yes, sir, I can.
Thank you.
Let's see, period. So if there are not more questions, let's go to the breakout room. Let's give this one 10 minutes. And okay, you tell me, guys, do you want to do the exercise now? Because we will not have time to review it until the next class. So we can finish the exercise now and review it the next class, or we can enter to the breakout room directly tomorrow and then review it tomorrow. I don't know what is gonna be better for you guys. How do you feel better?
Teacher, to remember what we have doing.
That's right, right? Yeah, tomorrow sounds logical. So let's do it tomorrow. Let's finish the class now. And again, the reason why we are finished now, because we have time to do the exercise, but we don't have time to review it. Okay?
Okay, teacher.
So we are gonna leave the exercise for next class. That's going to be the final case. And then next class, we are going, after we review this and we check how to use this information to do analysis, we are gonna start something called cost volume profit analysis, which is again analysis. We are again going to be doing some exercise and analyzing the data, and that's what we're going to be doing this week and also next week. Okay.
Okay.
Thank you.
Great, guys. So if you don't have any more questions, we will end the class now.
Okay, thank you, teacher.
Thank you, teacher.
Thank
you. So no questions.
Thank you.
No.
No. Okay.
No, thank you.
Thank you, teacher.
Andrea, Sofia, Agustin, Katia, Carla, Isabel, Nadia, Maria.
I have a question.
What question
Can
you have?
in the case 2, can you go to that? Sorry, my internet was really bad and I couldn't I was in the last explanation.
Here is the case number 2. So what's the question? Maria?
Yes.
Could you write the question here, because I cannot understand what you're saying.
Teacher, I have a question about the homework that is for today.
And do you have it for my module or for Sanson's module?
I think it's yours.
What's the question? But wait, what was Marine's question?
I don't know if she's writing it.
I'll ask her. No, I'm gonna ask her, don't worry.
But I think she left.
He said she was having some Wi-Fi problems.
Oh, okay, so tell her that if she wants asesoría, send me an email.
Okay, yeah, I'll tell her.
What was your question, Katia?
The inventory days is the same as the PC, I think.
Yeah.
PCI? Yes?
Yes.
Or is that I got it different?
No, it's that, but for the homework, I'm not asking you that already. That's actually a question for Sanson.
Oh,
All related with cash conversion cycle. It's a question you need to ask, Samson. Module 2.
Oh, then I confuse homeworks.
It's okay. So, well, Maya Marie had a question. She left, so I think we're gonna finish the class now.
I have a quick question also, if you could maybe answer it. Well, I have just 2 questions. The first one, is there like a minimum extension of the document, or it doesn't really matter?
Yes, I think it's one page.
Okay, and is there a maximum?
1 page. So that's the extension of the document. Do it one for one. No, wait, I'm sorry. That's the introduction. No, there is not a maximum.
Okay, thank you.
The whole document can be 5, 6 pages. But
okay.
the introduction can only be 1 page, okay?
Okay, thank you, teacher.
So
You
don't
scared
do
me.
a document like 20 pages long and 10 of those pages are just describing the company.
Okay, yeah, and well, the other question was, while I was analyzing with my team about which inventory evaluation method we should use, well, I asked my mother because she's an accountant, and she told me that she recommended the PEPs, primeras entradas, primeras salidas, but I don't know if it's okay because you told us in class that that was not the ideal one.
Well, it's not the ideal one for the case we are analyzing. It's actually the most used one on manufacturing businesses. If you want to propose that one, just explain why. Don't just put because my mom told me, right?
Okay.
You need to explain why is that the best method in this situation. The right answer there will be your best supported answer. So if you just put like, yes, LIFO is the best one because it's the best one in this case of business. Well, why is it the best one?
Okay, so I just need to justify in order to like convince you that it's the best one?
Well, not convince me, would prove me that that's the best option.
Okay, thank you, teacher.
You're welcome. Okay, so I'm gonna finish the class now. You have more questions, so you can go to break and then go back at 9:10 for Sanson's class.
Thank you, teacher.
Okay, thank you, teacher.
Bye.
Goodbye, guys.
Thank you.
See you tomorrow.
Goodbye.